I'd like to start recording. Hasmita, can you confirm we are on?
Yes, we are on. Please get started.
Thank you. Well, welcome everyone. We're trying to pilot a new webinar system and hopefully this works well. If you all have any concerns, just let me know. But before we get started, I'm super excited to welcome Jonas. He's been on Propel-X twice before, and now Aperio is doing super well. So I'm very excited to have him on board again and for us to have the opportunity to hear the updates. Before we begin, I would like to remind everyone of the following information. Propel-X is a funding platform, not a broker-dealer. A syndicate, if formed, will be managed by Plank Fund Management Corporation, which is a Nevada-registered venture capital firm. Private investments are highly illiquid and risky and are not suitable for all investors. Past performance is not indicative of future results. You should speak with your financial advisor, accountant, and/or attorney when evaluating private offerings. Neither Propel-X nor Plank Fund Management nor any of its affiliates makes any recommendations or provides advice about investments. The information you will hear today may be forward-looking about investments which have not been reviewed by Propel-X or Plank Fund Management Corporation. You should not rely on these statements but should carefully evaluate the offering materials in assessing any private investment opportunity, including the complete set of risk factors that are provided for your consideration on the Propel-X platform. With that, I would like to just very quickly walk everyone through how the process works. Most of you are familiar with the process because you're familiar with the Propel-X platform. But in case you're not, here it is. So I'm just going to go ahead and walk you through the process. So this is our website. Hasmita, can you confirm we can all see this?
Yes, we can.
Yes, excellent. Thank you very much. This is a website. When you log in, you will encounter, maybe I'm already logged in here. You will encounter, well, no, sorry. Upon login, you will be logged in to your dashboard, which is this. And when you go and view the opportunities, Aperio is right here. We're looking at the pre-Series B round. Here we are. You can view all of the materials. We have a lot of followers for Aperio. Many congratulations, Jonas. Their pitch deck is right here. So you can view it here. You can also download it from the bottom. A little bit about the company, etc. Here's who's on the team, all the documents, some webinars, videos, and so on. Here's the deal terms. Assuming that this is all good for you, you can go ahead and pledge interest through clicking that. You can invest as little as $5,000. We will charge a fee and a carry, and there's a 15% carry upon exit. So you just put in your investment amount and click syndicate, and things should be automated from there. So with that, I'm going to stop sharing, and I would like to go back to Jonas and hand over controls to Jonas. Jonas, please go for it. Thank you very much, everyone. We're excited about this.
Great. Thanks for setting this up. So first, what I would like to do is make sure you can see my screen
yes.
here.
Yes.
Great.
We can see, hear you. Everything's all great. Thank you.
Yeah. I'm just going to share it like this. I'm not going to do full screen because I'm in a web browser, and sometimes when I do that, strange things happen. So the only other question I had, Swati, in terms of format, is it better that I walk through this in sort of 20-25 minutes and then we take questions, or does it usually work better we go Q&A along the way?
No, I think you should walk through this in 20 minutes and then we have Q&A. So everyone, please submit your questions and I'll moderate them as usual, and Jonas will answer those at the end of his. Thank you.
Okay, great. And you can hear me okay here, since I had to dial in on my phone to get the audio to work. So probably on my side, my apologies. I have to figure that out. Okay, great. Very good. So thanks for your time, all of you. And let's see what we can get done here in the next 20 minutes then. So I'm the CEO of Aperio. We are an A-round funded technology company. We are about 30 people, 30 to 35 people. And we are based in the US. We have software development in Tel Aviv, in Israel. We have a couple of people in Europe as well. We focus on industrial data quality. And of course, I'm going to explain what that is and how that helps the industry in a minute here. Industrial companies, and the companies we're talking about are oil and gas companies, upstream, midstream, like pipelines, downstream, like refineries. We have customers in all three of those. Power utilities, mainly power transmission, power generation, mining, and heavy industries in general. So we have customers in steel, we have customers in mining, for example, Rio Tinto, Newmont Mining, process manufacturing. So customers here include Covestro, they make plastics, International Paper, they make, of course, paper. So those are the verticals that we focus on. And so when we talk about industrial companies from the perspective of Aperio, that's what we're talking about. All of those companies are leaning in on AI and analytics now. What that means is that they're all taking advantage of advanced analytics and AI, and this is only growing to achieve enterprise goals, like, for example, reducing their carbon emissions or improving utilization or improving operations in general, reduce energy consumption. There's a lot of environmental reporting, methane leaks, things like that, right? So what they're doing is they're taking advantage of analytics and AI to accomplish these things. The hidden problem with all of that is that for all of this to work, they need large amounts of data. So what they're doing is they're taking all their historical data, and the data we're talking about here is going to be operational data, sensor data. So take, for example, I don't know, like a refinery, right? And they may have 500,000 sensors that are essentially measuring, the eyes and ears into the operations, the temperature in the boiler or the pressure in the pipe or something like that. So that's the data we're talking about. All of this data gets historicized and put into a big database, and then they use this data for analytics and other things. The hidden problem with that is that this data, by and large, is not in very good shape. The data is not cohesive. It's not labeled correctly. There are gaps in data. There are other issues with data. I'm gonna try not to get too technical here and keep it high level. And if we want to ask questions, we can go then. But the issues with the data ranges from sensor, issues, miscalibrated sensors, drifting sensors, disconnected sensors, to network issues, to all sorts of other problems. A plant might be in a period of maintenance, and so there's an outage, but data is still coming in and makes its way to the database. So the bottom line is that these companies need all this data for all this analytics and AI, but because the data is not in very good shape, the industry average is that about 20% of the data that they put into these models is useless. We end up with what we used to call garbage in, garbage out, right? So it follows that for analytics and AI to work, the data has to be complete and clean and reliable. And so what Aperio has built is a scalable platform that accomplishes just that. What we do is we connect to data sources, and all of these companies that we're talking about have all this data already in some kind of database. The industry calls it a data historian. And many companies now are building cloud-based, data lakes. So the data is already there. And what Aperio has built is a platform that can monitor all of this data at scale automatically and score the data, validate the data, find out what's the problem with the data, and basically give the customer an indication of what to do to fix the data, so that the outcome of all of that is that they can use clean, reliable, trusted data for all their analytics needs, rather than incomplete and poor quality data. The way we do that, and again, I'm going to try not to be technical, so I'm just going to kind of breeze through this very high level. Is the way we do that is we have built a machine learning based platform that can inspect data at scale with no need for human intervention, no need for configuration, and with the ability to solve very complex cases, like, for example, automatically detect outages and other things, and sensor drift and things like that, and able to do this at scale. So this is also part of the sort of like what's key to this is that this has to be done at massive scale because these companies have massive, amounts of data. So this is what Aperio has built over the last 4 or 5 years. Here is basically the ability to automatically, validate these massive amounts of data for these industrial companies to help them with making sure they have clean data that goes into all their, data analytics and AI needs. And why is that important? Well, so what we're finding is that the amount of money that's being spent on this now is staggering. I mean, 5 years ago, this was not a big thing, right? And plants, would maybe use data for pockets of analytics and maybe, some reporting and things like that. But mainly data was being used for operational needs, making sure that the plant runs. But today, and then going forward, industrial AI and industrial analytics are growing, very, very fast, and it's becoming, over $100 billion industry by 2030. And so we've also found that these customers are already spending between 10 and 15% of their data analytics budgets on specifically what we do, which is data quality. So what we have here is a very big market opportunity to help these companies, clean their data. We do this for industrial companies, and here's a list of most of them. So you can see here, when I said before that we work with companies like oil and gas and process manufacturing and power utilities, and you can see here who some of those names are. So we already work with some of the biggest industrial brands in the world. We've already started to renew and expand some of these brands as well. So the proof points for us are there, right? We have been able to show that companies like Chevron, for example, can depend on a service from a company like Aperio. The way we engage with these customers is we always start with a small use case. We start with a POC or a pilot. We deploy. So take, for example, Cemex, the cement company. We started by deploying in one plant. They have 60 plants, and then we go from 1 to 2 to 3 to and then eventually we reach enterprise agreements with some of these customers. So this is sort of like the profile of customers that we work with at Aperio, and all of them use us for basically the same thing, looking at their data, making sure that their data is validated, so that when they use it for operational decisions or for analytics and AI, they can trust that they base their decisions on good data. I'm going to come back to a couple of use cases in a minute or so. We have a really strong management team here. You've already met me. We have a head of customer success and operations, who's Jane Arnold, who's been in the process control industry for 30 years. She's one of the, I would say, most accomplished experts in industrial process control. And it's important because when we go talk to these customers, we need to speak their language. We need to understand, their world. So that's why we decided to bring somebody like Jane on board. We have a head of sales, John Komatakis, who's been over 30 years in industrial software sales, and the past 20 years of those at a company called AspenTech, where he was global SVP of sales. AspenTech just got bought by Emerson for $16 billion, and he decided to leave and come over here. So he has spent his entire career selling industrial software to industrial customers. So he knows better than anybody how to take this kind of technology that we built and scale it up from a sales point of view. And then we have Nir, who's a AI and a machine learning expert who runs our software development team in Tel Aviv. Who's been with us also for over 4 years. Who runs the R&D, the R&D team. So when I talk about Aperio, when I think about Aperio, and I compare ourselves to other companies at our stage, I'm very proud of the caliber of people that we've been able to put on this team. And of course, there's another, almost 30 people in the company who also are experts in their own right and really, really, really good at what they do. We've always run Aperio with a philosophy that we want, fewer people to do more. We're not trying to be, the biggest company, the biggest team. We try to be, more with less and find the smartest people that can work really well together. So right now where we are is we've basically come to, a point in our path here, in our journey, right, where the need for what we do has evolved very quickly to become a foundational requirement. If you go back 2 years, 3 years ago, and you talk to these companies about data quality, they'd say, yeah, we get it. We don't need anything for that. We handle that, because it was kind of like a reactive sort of afterthought. But with the rise of AI and advanced analytics in particular, data quality has become, in most customers' minds now, a foundational requirement for them to, be able to operate. We are the first mover in building a scalable platform that can solve this. I don't want to say that we have the foresight 3 years ago and nobody else did, but for better or for worse, almost for better or for us, we started building this 3 years ago because we thought that there would be a need for this, and we were right. So we've had a few years under our belt here building this stuff. It's not easy to build something like this at scale. So we are now in a position where we are by far the most advanced and the first mover in solving industrial data quality at scale. We're working aggressively on AI and agentic AI to incorporate that into our product, and we're coming out with the first pieces of that now in Q3, and then more in Q4 and every quarter. We proved that our product works, and going back to these customers, right? Like, people are looking for product market fit. We haven't, we're not yet at that sort of like, revenue scale where you go 5, 10, $20 million. And I'm going to show you kind of where we are on revenue as well in a minute. But we have proven that the product works by landing and starting to expand, with customers like these, right? And most startups would be, very, very, very proud of a customer list like this. So we've proven that, this technology is working. We've proven that there's a need for it. And also, when you look at the customers that we have, there's huge expansion potential at all of these accounts. These are very, very big customers. Just take Chevron as an example. I mean, huge company. So easily we can get, to 7-figure types of deals there, right? It'll take 1 or 2 years or so, but there's a lot of expansion, opportunities. We've also built a pipeline of more prospects behind this. We actively work with over 130 sales prospects right now, where we have relationships and where they know us, and we're constantly selling into them, and that's now led to us getting at a higher and higher pace new customers coming on board faster. And we have, like I said already, a very strong management team. Now, just to talk a little bit about sort of like, so we can put what I just said into context, like, why do people use Aperio? So here are a couple of use cases. Devon Energy is an upstream oil and gas company, who also, by the way, just became an investor in Aperio as a result of really liking our product. They use Aperio to validate all their time series data, their sensor data, so that they can know that what goes into their analytics is solid. They've worked with us for 2 years now. Air Liquide is a French gas company. They make things like hydrogen and nitrogen and oxygen, and they have a mandate from their board, they're a public company, to report their carbon emissions. And for them to do that, they depend on a lot of data from their plants. And one problem that they've had in the past is that this data is unreliable. A flow meter gets stuck, for example, or something else doesn't report correctly. We can automatically validate all their data so that when they put out their annual reports and report their carbon emissions, they know that this data is right. So we became sort of like the audit layer almost of their data that they use. Let's see here. Coterra, upstream oil and gas company. They explore oil and gas. They have hundreds of storage tanks, and one big problem that they've had in the past is that these tanks leak methane, and it's very expensive to leak-proof all these tanks. So they needed a different method to be able to detect methane leaks. And what they started relying on was pressure sensors, and they were looking for abrupt changes in pressure. One of the problems they ran into was that they never knew if these pressure sensors were actually telling them the truth or not. These sensors are notoriously unreliable because they're in a very harsh environment. So what Aperio was able to do was to give them a dashboard that told them essentially like a red, yellow, green, traffic light report. Your pressure sensors are working. They're telling you the right data, so you can trust, the data, and that allowed them to essentially scale up a much more cost-effective monitoring of methane leaks. About where we are with fundraising. So we're now raising $7 million to try to now put Aperio on a growth path. The $7 million is in the form of a convertible note. We have already closed 3 million, and we actually have a commitment for another million. So we're 4 million into the 7 million, and we have several investors in late stage due diligence looking at taking a piece of the remaining 3. Those investors are by and large strategic investors, and in particular actually customers that are happy with Aperio as a product vendor and therefore wants to also invest. And so I mentioned, and I can't mention all of them right now because some of them are not quite there yet, but I mentioned Devon Energy, for example, is an example of that, where they came in and wanted to invest in Aperio because they really like the product that we've built and the value that we add to their operations and data science teams. Last but not least, I want to say something about AI, because my personal belief and our philosophy at the company is that if we don't go as a software startup, you have to go all in on AI for a couple of reasons. One, because it's going to make us drastically more productive. And so if we don't, then somebody else will come and run faster than us. And two, because as a software company today, and especially going into next year when we're aiming for raising a B round, if you don't have a solid AI foundation in your product and in your company in general, you're probably not going to be very attractive to most investors. So we've leaned in on AI from day one. Actually, our entire platform is built off of AI because we got to keep in mind that unsupervised machine learning is also AI. It doesn't have to be large language models and ChatGPT, right? AI is also machine learning. So we built our entire platform based off of unsupervised machine learning. However, we are now also leaning in and working, very hard to expand our AI influence in our product, and we're currently doing that in 2 areas. One is an AI companion that's going to allow the user to get more insights into what's going on with their data, and that's actually we've actually built that already, and we're demoing this internally, but we haven't released it in the product yet, where a customer can ask questions about what's going on in their data lake and what kind of problems there are and what they should be doing to address those issues. And then the second thing we're working on is what we call a data remediation agent that's going to allow customers to essentially take a database full of historical time series data and sort of repair it so that it can be used for a AI or analytics model. So think like you may have a data from a refinery, but for some reason there's a gap in the data. There's 2 weeks of data that's missing. There's just blank. But if we have access to all the historical data, we can infer what that would look like and kind of fill in the blanks. And it's not something that would be used for operational decisions because that would not be possible. But you can definitely use it for AI and analytics models. So that's sort of where we are with AI and how we're building AI more and more, into our product as well. So that was my presentation. I hope that was somewhat clear and concise. I love to talk, and I can sometimes get a little bit ahead of myself and keep talking. So I will stop here, and I'm happy to take questions and happy to go in any direction that would be helpful.
Thank you so much, Jonas. So let me just join in here. Thank you for your presentation. Everyone, if you have a question, please submit it in the chat box at the bottom. There is a question mark which shows the questions that are, that's the button where you submit the question. There's a couple questions already, which I will get to. Thank you for your questions. Just give me a minute before I get to them. Before we even go there, I have a fundamental question for you, Jonas. Number one is the data quality, right? So how do you actually do it? Are you smoothing, let's say, time series data? And you said that, let's say sensors were dysfunctional or they were not functioning properly for a week, right, in a year. How do you fix that data issue? And then you had mentioned this pressure sensors. How do you know that an anomaly, in fact, is not really a pressure leak? So if you could tell us that.
Yeah. Okay. Good. So good questions. So these are big questions, and there's not a sort of like a stock answer that's the same across the board here. But first, let me say, so how do we do this, right? Now, there's detecting issues. Second, there's repairing data. Okay, let's park the repairing data for a second and just talk about detecting issues. Now, take okay, take, let's say, Chevron or Devon Energy, right? They have tens of millions of sensors. I mean, these companies are thinking of data and sensors as an asset. Before, 2, 3, 4, 5 years ago, whatever, data was kind of like data was just data, and the assets were, right, like your pump or your heat exchanger. These were your assets. Now companies are thinking of data and sensors as assets as well, right? And so a company like Chevron, they have over 10 million sensors, or call them data streams. Years and years of data that's been collected by this temperature sensor that goes through this flow that you can see in the slide here, ends up in a historian and then a gigantic, cloud-based, data lake, right? So one of the key things here is that we're talking about massive amounts of data, millions of data streams. So how do we do it? What we do is we connect to these databases, and so we have a data connector. Our software is then going to deploy what we call micro models or bots, and each bot is trained for a specific purpose. So we have bots that are specifically trained to find flatlining data, bots that are specifically trained to find gaps in data, bots that are trained to find noise, abrupt changes, outliers, whatever it may be, bots that are trained to find more complicated things like drift. So like you have a sensor that's measuring temperature, but over a month, 3, 4, 5, 6 months, maybe it drifts, because the calibration is lost. So we have bots that are trained to find all of these issues, and they do it automatically. And by and large, they do it by applying unsupervised machine learning. so the bots will inspect historical data, whether it's 1 month, 2 months, 3 months, or more, depending on the specific issue that it's looking for. It's going to ingest that data. It's going to build a model that it thinks represents what normal would look like. Then it's going to, and we have some, I mean, that's why this was hard to build, some sophisticated algorithms that then will test whether the training worked or not. So we have essentially like a 3-phase process here where we do train, validate, and monitor. And the validation is where you inject synthetic anomalies. So we kind of like, create a flat line, inject, and see if we find it. All this stuff happens automatically. Now, when it gets to finding out whether this is a process anomaly or a data, anomaly or a sensor issue, that gets complicated, and it really depends on what the anomaly is that we're looking for. But we utilize things like looking for signal to noise ratio. We look for other types of things in there that where we could sort of differentiate between like, for example, if a temperature spikes, for example, and it's actually a real spike in the process, it ain't gonna happen at there's this physical rate where that could possibly happen, versus if you have a data issue when it could spike instantly. So there's so much stuff that goes on kind of like under the hood here that tries to do that. But that is essentially the sort of like the I don't know, the sauce, right? Like the sausage in the in here, that's able to find these issues at scale, very cost effectively, and with a very, very high accuracy. Of course, it's not perfect. So sometimes it does happen that, we find a data anomaly and it's a process issue, not a data issue. But we've gotten very good at that over the time. And so what that results in, right, is essentially 3 things, and you see them here: data scoring, data validation, and data remediation. So the data scoring is something we call the DQI, the data quality index. So for the first time, these companies never had anything like this before. For the first time, they're able to measure the quality of their data. Think like 5 million data streams, and then what we can do is we can take and we shine a light on that, right? And we say, for this whole database, your data quality score is 80%, 90%, whatever, right? Maybe we give it a number, and we have ways to calculate that number and define how we, calculate that number. And so we can do that by, plant, by data type, by whatever we, it's like whatever dimension we want to. And so that you as a customer can measure the quality of the data over time. Then we do data validation. That's on a data stream by data stream, individual data stream. I want to use this particular data, this flow sensor. I want to use it in my analytics model. Is it good enough? Red, yellow, green, right? Is it fit for purpose? So a data scientist may pick 500 data streams. They want to build a model and, and do some kind of modeling on that. And before they do that, they want to know if these 500 data streams are good enough for the model, and we can tell them this automatically. And then remediation is really, we tell you this problem you have here could be an interface outage, could be a calibration issue on a sensor. So we can sort of like pinpoint the root cause and then issue cases or tickets so you can go fix those. All this stuff has to do with measuring and tracking and evaluating data issues, not anything to do with actually repairing the data, right? So Swati, when you said smooth out the signal and stuff like that, this has nothing to do with that at all. Now, last thing is that's coming up, and that we're going to have in our product by the end of this year. Now we'll be able to also start to fix data. So that's where we're using agentic AI, because that's really hard. You can do it, I mean, you can use very simple algorithms for that, but when you start digging into that problem, and if you actually want it to be good, it gets very, very complicated. So we're building on this. So what we will be able to do also by the end of this year is to start to actually take a data stream and repair it by filling in the blanks, by smoothing out the outliers, and just make it look like a real, good, data set that you could then feed into a model.
Okay. All right. That was a long answer, but I think I get it. Okay. I think I get it. If there's further questions on this topic, please share. But there's a bunch of questions which are to do with the deal itself. Let me get to those. Which is, what is the post-money valuation? Okay, let's just talk about the terms of the deal. So what we have currently listed on the platform is an uncapped note, an uncapped safe with an 8%, uncapped note with an 8% interest and no discount. Is that correct?
It's a capped convertible note. Actually, by the way, I want to say also that our current investors are major industrials like Chevron, like NextEra Energy, like National Grid are already investors in Aperio, and they are all of them also investing in this convertible note. It's a $7 million convertible note. It's got a 20% discount. It's got an 8% interest. It's got a 2x liquidation preference. The convertible note will convert into the B round. At that point, the liquidation preference will go away. So it's a 2x until it converts. And then, of course, it's going to convert into whatever the terms are in the B round. But if the company were to liquidate or sell before the B round, then this convertible note will basically have a 2x plus interest liquidation preference. We have no debt in the company. So there's nothing that comes, ahead of this note.
So, but what is the cap? There is a
40
reason.
million.
40 million. Now, you did not specify this on the PropelX platform. There was a reason, right? Please remind me. We went back and forth on this.
I didn't want to. I wanted to wait for just to talk to the people that are interested, so we kind of keep the a company like ours, we don't want this stuff to float around too much. It's sort of like for us kind of sensitive information. So what I preferred to do was to kind of not be too specific on the website, but share it in the call. And I'm happy to share, by the way, anything that you want to know about us here, because at least now we have people that are indicating interest and
Right. Got it. So in summary, Thomas, it's 40 million cap. Is that a post money or pre money?
Well, no. So basically, there's no pre or post money here in the convertible note, right? So this is a convertible note, but when we raise a B round, so think like this: the 7 million we're raising now will fund the company easily through 2026 to a B round. Where we should be then is north of $6 million in ARR. I have a higher number here in my plan, but even if we were to sort of discount that, we should get north of $6 to $7 million in ARR. And based off of that run rate and based off of that growth, I mean, we'll grow 2.5x this year. We'll grow 2 to 3x next year. We would then go raise a B round. The valuation, of course, of that B round will be higher than, well, we're hoping, right? A lot higher than 40, but we don't know what that valuation will be. So whatever that valuation is in the B round, whether it's 80 or 100, or maybe it's less or maybe it's more, I don't know. To your point earlier, right? Like, we're not trying to predict the future. But this convertible note will convert will convert into the B round at a valuation that will not exceed 40 million for you. So it's your discount.
So it's a pre-money valuation. So it's a 40 million cap, a 20% discount, 2x liquidation preference until the note converts. After conversion, of course, we'll have the Series B terms, and an 8% interest. Okay. What is the path for a return to investors, Jonas? What do you think of an exit? Who would be acquirers, potential, and so on?
So, who can acquire Aperio? Is going to be companies like these, right? So, Aviva is a $20 billion software company owned by Schneider Electric. Aspen Tech is the other leading software companies. We know both of them very well. We know the management teams there. We're friendly with them, and they appreciate what we're building. Then you have others like Honeywell, Siemens, of course, Rockwell Automation. We know them well. I don't know about GE that much, but so there's these industrial, they're like these large, multinational industrial software companies. There are other companies in that category too, like C3 and Cognite, a little smaller, but nevertheless, important companies. Then you have like the hyperscalers of the world, right? Like, so we're already on the AWS marketplace, by the way, so you can actually buy Aperio through AWS. But you have AWS and Azure, Databricks, and Snowflake, who are really leaning into industrial data. We know all four of them very well. We work with them very well. We're not officially partners with them, other than AWS, where we are on their marketplace. But that's another sort of like potential acquirer. So that's sort of like the universe of companies that could, need Aperio ultimately at the end of the day. However, my answer to the question is really, I don't think about it now. I think about, building a company, right? So my whole, like, I just wake up every morning trying to sign another deal, try to get another customer, try to grow the revenue, try to grow the company, get it to cash flow positive, whatever, right? Like, so I sort of think about it more like that. I'm not sitting here thinking about how and when to sell it, because I think if we build a successful business here and we get to these, and we continue to be the leaders in this market and we execute well, then we'll be an attractive acquisition target to one of these. We are planning to raise a B round sometime in next year. And I think that's probably the most likely path, but there's certainly scenarios, where somebody wants to buy us before then as well, but we're not sort of like trying to sell it.
What could you review the ARR numbers again, please?
Yeah, so we are at about right now we're in between 2 and 2.3 in ARR in terms of run rate. We're aiming to get, I know this number here is 4.7. We're not going to get all the way there. We're aiming to get to 4 or so by the end of this year, and that is basically current run rate. So if we get to 4 this year, and then we can double that to 8 next year, and we can do that on the back of these 25 or so customers that we have already. Plus, I would say we'll probably close another 10 customers this year in Q3 and Q4. I think, and it's basically more of the. They'll all be names that you recognize, and they're all going to be sort of like in the oil and gas and power. So say 35 customers by the end of this year, and maybe in the $4 million range in ARR. But it could be a little bit less than that, could be a little bit more than that. But that's how we're thinking about it right now.
But right now, to be very clear, the run rate is 2.3 million, right?
Yeah.
Based on the current run rate, we expect to get to 2.3 million. If we close new customers, then of course it's cherry on the top, right? So it's 2.3 million right now. Okay.
Yeah, and then in the interest of making sure that there's full disclosure and no confusion, there are some of those in that number that are not right now paying us. For example, we just signed, I don't know, Marathon Petroleum, right? We just got a purchase order from them this week. They haven't started paying us, but I'm still counting that as booked. So it's really committed, ARR. But that's normal.
Okay. All right. Thank you for that clarification. How much money have you raised so far before this round?
We have raised about 17, and that was done in 3 main events. There was a seed round, there was a round in late 2020, which you were part of, by the way, and then there was and you were in the seed as well, actually. And then there was an A1 that we did in March, April of 2023. So between those, we raised about 17. And all of that is very clean, 1x liquidation preference, no participation. So, although we have some money in, it's all, there's nothing in there that's got some kind of, protective provisions that are unusual or blocking rights or anything like that. Most of it is from strategics that like Aperio as a customer. So I'm pointing to this slide here. Companies like Chevron, NextEra, National Grid, that really like Aperio as a product and wants to invest in us because they believe that we're adding strategic value to their operation.
Yeah, no, I had a recent call with Chevron, and Kimmel was very gung ho about you. So many congratulations.
Right.
Yeah. Okay.
Oh, great.
What is your path to profitability?
Okay. This is another one of those trick questions. So with 7 million, we can get to profitability because at our current OpEx, we become cash flow positive right around 6.5 million in ARR. So we can take the company to cash flow positive on this money. Depends on if we want to. So I think that when we go into, there's a lot, right? This year, we're at the cusp of AI really going mainstream. We know that data quality is the number one issue that's holding companies back from adopting AI. So as we go through Q3 and Q4 here, and we go into next year, we may or may not decide, that we want to go faster and more aggressive and delay that sort of profitability kind of mark. And it also depends on what the world looks like next year, right? Like these are certainly some uncertain times with regards to people making capital investments and things like that in the market. So that's a bit of a long-winded way of saying it's possible to get to cash flow positive here. We're not the kind, I'm not like, we're not the kind of company that's going to be like, eyeballs at the, growth at the expense of, nothing, right? Like, so we want to be, careful with how we spend our money. But as we go into next year, we may decide not to try to get there, but it's possible to get to cash flow positive on this in the next 12-15 months.
So the answer to that question is that 12 months from now is 2026, August. So on this fundraise, which is on the back of the 7 million, we could get to profitability, but we may choose not to if we decide to invest in growth. Okay.
Yeah.
Understood. Thank you very much.
Yeah.
And so that suggests your current burn rate is so you need about 500,000 per month.
My current burn rate per month, my net burn right now per month is about 350,000 per month.
Yeah, and because
keep in mind we already closed. So of this 7 million, we already closed. 3. So and that was done in June. So we're already 2 months into that, right? So and now we're working on closing the remaining. But yeah, to answer the question, our current burn is about 350 net burn, and that assumes OpEx is about 450.
Got it. All right, great. Well, thank you. I think these were fantastic questions and got to the nub of the main issues. I don't have additional questions. If anyone else has any more questions, please ask them now. As you can tell, this, Jonas is very secretive sometimes, but he's here to answer your questions now. So if there's questions, please ask them. Last call. Otherwise, Jonas, thank you so much for your time. We are excited to have been part of your journey from the seed round and the Series A and so on and so forth. And I'm excited to continue on this journey with you. Oops, we have another question. Who are your main competitors?
Oh, good question. So our main competitors are, there's one other company out there that is doing exactly what we do. And that company, it's called timesphere.ai, and I just put it in the chat. So if you go there, you're going to see a website that tells a story that's very similar to ours. I will point out that we were first, and I think they stole our idea. But it's good to have competition because that shows there's a market. Other than that, most of our competition comes from in-house tools. So we go to Chevron, we go to Shell, we go to Saudi Aramco, right? And they've already built something in-house because they've already recognized the need for solving data quality. So what they've done is they've started building. Sometimes it's disjoint and scattered and scripts here and there, but there's usually something in place that sort of like tries to clean data, tries to validate data some way or another. And so it's not like these companies, these oil companies want to be in the software business, but that's certainly a hurdle, because if there's some sunk cost in there, then we got to come in and show why they would switch from what they have already to using us. That's basically it. Then yeah, of course, right? Like Databricks and Viva and Honeywell and all of them, right? There's like little features here and there, there's small pieces of this, but there really isn't anything that's kind of like built a scalable platform like the one we have here right now, other than that.
Great. Well, thank you so much, Jonas. I think we are at the end of our time. I thank you for your time. I'm excited about this, and I hope we can put together another syndicate to invest in your company. Good luck with everything. We are rooting for you. Thank you, everyone, for your time. And if you have more questions.
Yeah, last thing, by the way, feel free to reach out to me. I'm sure you can do that via the platform. I'm very happy to, talk to each one of you individually or on the platform and answer more questions as you see needed. So just feel free to do that.
Exactly. So through the platform, there's an ask a question feature. You can use that. We will make sure that Jonas gets your question directly and he will answer it. So you can please use that. Otherwise, let us know, reach out to Jonas, whatever works for you. Fantastic. Excellent. Thank you very much. Bye, Jonas. Thank you, everyone. Bye-bye.